Okay, let's dive in. If you're working in global banking, especially uh, capital markets or treasury, you absolutely know things are changing fast.
Warp speed is probably the right term.
Yeah, and it's more than just, faster computers or new software.
Yeah.
Technology and AI specifically, it's really reshaping the jobs themselves, the actual work people do.
That's spot on. We're seeing this huge re-engineering effort across finance. AI isn't just a tool sitting on the shelf anymore. It's becoming, well, an active player, taking on tasks that used to be all about human connections, manual work, endless routine analysis.
Exactly. And that's what we're really digging into today, how this AI ways and digital transformation are changing careers
Yeah.
in these critical banking areas.
And this whole deep dive, it's grounded in a really detailed report that looks specifically at these shifts.
Right. So our mission here is to pull out the most important stuff from that material. We want to understand, which roles are changing most drastically, what skills do you actually need to survive and, well, thrive.
And how do you even navigate this landscape? Because it's moving so incredibly fast.
Okay, so let's set the scene a bit more. The core idea, as you said from this report, AI and digital are fundamentally changing capital markets and treasuries. So jobs that used to rely on like who you knew and doing things by hand.
That's shifting massively because we now have these pretty sophisticated AI agents, really powerful predictive analytics, and just automation covering things end to end. The report really highlights three key areas where you see this most clearly.
Which takes us straight to the first big one, trading and market making. This kind of feels like ground zero for the AI revolution in finance, doesn't it?
It really does. I mean, think back maybe 20 years, totally different planet. Human traders, shouting on floors or glued to phones and chats, trying to get a feel for the market, relying on instinct.
And that human intuition, knowing the players, what's it like now?
Well, now, a huge chunk of trading equities, FX, bonds, you name it, it's algorithmic. High-frequency trading platforms, you've got AI agents constantly scanning order flow, adjusting prices in fractions of a second, executing trades, often with very little direct human touch in the moment.
Okay, so the algos handle the speed, the volume, but the report talks about the near future too, right? With things like generative AI. Where does that go?
Yeah, this is where it gets really interesting. The report talks about integrating generative AI and these things called agentic AI. We're talking about AI potentially handling client chats, maybe even negotiating some trade terms, calculative risk-adjusted prices on the fly using live data.
Wow, an AI negotiating. That's
Yeah.
quite a leap. So the human trader's job changes fundamentally then.
Mm.
Less clicking buttons, more.
More strategy, definitely. Overseeing how the algorithms are actually doing. And this is crucial, managing those weird, complex, unexpected situations, the tail risks that the AI just isn't built for.
Right. You need the human judgment for the curveballs.
Yeah.
And the new job titles the report mentions seem to reflect that things like AI execution strategist, quant trader focused on machine learning, trade surveillance data scientist, it's all about blending finance and tech.
Absolutely. Okay, now let's shift gears. Another area the report dives into, one that felt maybe even more about relationships than trading. Primary bond issuance and commercial paper placement, helping companies raise debt, basically.
Right, like a big company issuing bonds or needing short-term cash via commercial paper.
Yeah.
That always felt superhuman intensive, calling investors, coordinating everything.
Exactly. Very manual, tons of coordination. Sales, legal, the issuer, investors could take days, even weeks, just to get a deal done. Lots of back and forth.
So what's the now? How has digitization changed that?
We're already seeing a lot of change. You've got platforms like Market Access, LiquidNet, streamlining the process, smart templates for documents, APIs connecting different systems, even some initial AI helping gauge investor interest and pricing during the marketing phase.
Okay, so faster, more connected. But the near future described in the report sounds like another big jump.
A huge jump. The report envisions AI agents taking over tasks like coordinating virtual investor roadshows, handling common issuer questions by pulling data automatically, drafting initial term sheets and contracts from templates, and even routing commercial paper deals straight to the investors most likely to buy, autonomously.
Whoa, autonomous agents running the deal flow. That's really different from manual coordination.
It totally changes the skills you need. The emerging roles, the report flags here, things like digital syndication manager, AI agent workflow designer, someone who actually builds and oversees these automated systems, and debt origination quant analysts using data to model pricing and investor appetite.
Interesting. The quant skill set moving firmly into origination. Okay, third area, treasury and liquidity management, managing a company's cash, its financial risks.
Precisely. And historically, often incredibly manual. Treasury teams juggling spreadsheets for global cash, figuring out hedges by hand, spending ages reconciling accounts.
Hmm.
Prone to errors, too.
Sounds like a nightmare just keeping track. How's AI changing that picture now?
Well, now you have AI-powered treasury management systems, TMS platforms giving real-time consolidated views of cash globally, predictive models forecasting short-term liquidity needs, modeling complex FX risks much more accurately than before. It's already way more data-driven.
And looking ahead, the near future for Treasury.
This is where the report brings in autonomous treasury agents again. Imagine agents automatically triggering hedges when risk limits are hit, instantly reconciling cash across different banks, even using bank APIs to automatically move idle cash into sweep accounts or short-term investments to get better returns.
Ooh, so less manual checking, more dynamic automated management, and the roles reflect that shift too. Treasury automation engineer, FX AI strategist, liquidity modeling analyst. It's all about building and managing these smart systems.
Exactly. And underpinning all these big changes in trading, issuance, treasury is a specific set of AI tools and technologies. The report gives us a peek into this AI toolkit.
Okay, so what's actually making this happen? What are the key technologies?
Well, first you have things like natural language processing, NLP, and large language models, LLMs, the AI that understands and generates human language. The report shows them being used for, say, summarizing long earnings call transcripts, answering routine investor questions automatically, or speeding up client onboarding by reading documents.
Got it. Language AI for text stuff. What about the more complex decisions, the strategies?
That's where you see things like reinforcement learning. This is AI that learns by doing, basically. It gets rewarded for good outcomes, penalized for bad ones, so it optimizes its approach over time. The report mentions it for adaptive trading algorithms or making dynamic hedging decisions.
Interesting. It learns from experience. And what about automating all those repetitive steps we talked about?
Often that's a mix of robotic process automation, RPA, coupled with machine learning. RPA handles the structured, click this, type that tasks, and ML helps it deal with messier data or slightly more complex decisions, like in tray booking, payment matching, or reconciliation.
And the auto generation,
But
like drafting term sheets.
that's generative AI. It can create text, like contracts or summaries, but also potentially auto-generate reports or dashboards based on data inputs.
And that most advanced bit you mentioned, agentic AI.
Right, agentic AI. These are AI systems designed to act more autonomously, maybe interacting with other systems or agents to complete a whole process. The report sees this enabling end-to-end flows, like executing a trade from start to finish, or handling simple client service requests without needing a human for every step.
Okay, that's a powerful toolkit. Which brings us to the million-dollar question for anyone in this field or thinking about getting into it. How do you actually get ready for this AI-driven future?
Yeah, the report gives some clear guidance there, starting with education, building that foundation.
What kind of degrees are most valuable now?
Well, an undergrad in finance or business is still relevant, of course, but the report really stresses the growing importance of computer science or data science degrees, especially combinations, maybe a finance major with a CS minor or vice versa. Those hybrid profiles are seen as having a real edge.
And for postgrad, MBA is still the thing.
An MBA in finance is still one path, sure. But master's degrees in things like financial engineering, AI, or data science are increasingly viewed as almost essential for those really cutting-edge quant or AI-focused roles.
What about certifications? Do they still matter, or is it just about coding skills now?
Oh, they absolutely matter. Crucial for adding that specialized knowledge. The report lists several. The CFA Chartered Financial Analyst, still very highly regarded for capital markets, investment analysis. Then the FRM Financial Risk Manager, that's key for treasury and risk roles.
And if you want to go really deep on the quant or AI side,
The CQF, the Certificate in Quantitative Finance, that's strongly recommended, especially for quant trading, derivatives, really understanding the math behind the AI models in finance.
okay, and proving the tech chops.
Yeah, programming and data skills are basically table stakes now. Certs from places like Python for finance courses, DataCamp, edX can demonstrate that. Knowing your way around the big market and treasury platforms, Bloomberg, Refinitiv, Curaba, SAP, and crucially, how to use their APIs to get data, that's listed as important too. And definitely AI engineering certs from Coursera, IBM, Google, showing you can actually build and manage these new AI systems.
So it really is about stacking finance cred with serious tech skills, which leads right into the essential skill sets for, say, 2025 onwards. The report splits these into technical and domain plus soft skills.
Yep. On the technical side, programming. Python is huge. SQL for databases, R for stats work. Then AML itself, knowing the main libraries like scikit-learn, TensorFlow, XGBoost, how to build and train models.
And showing what the models found.
Exactly. Data visualization. Using tools like Tableau, Power BI to build dashboards, tell the story with the data. And API skills are critical, knowing how to pull data from sources like Bloomberg API, Refinitiv, Quandl.
Automation seemed like a big theme across all the roles.
It is. So knowing tools like UiPath for RPA, Alteryx for data lighting and automating workflows, even advanced Excel and VBA still have their place, surprisingly. And understanding cloud platforms, AWS, Google Cloud, Azure, because that's where these big models often run.
That's a serious tech list. But it's
That-
not just tech, is it? What about the finance knowledge, the human element?
Just as vital. Maybe more so for the parts AI can't easily replicate. You need deep understanding of, say, trading systems, like a fixed protocol, the language trading systems used to talk, or order management systems, OMS, execution management systems, EMS, how the plumbing works.
And the actual financial products.
Absolutely. Knowing the instruments inside out, bonds, commercial paper, swaps, whatever it is, and regulatory knowledge is non-negotiable. The report mentions Basel III, EMR, MiFID II. You have to understand how these rules apply when you're automating things or using algorithms.
How does teamwork change?
Cross-functional collaboration becomes even more important, bridging the gap between the hardcore tech AI teams and the traditional finance folks. Storytelling with data explaining complex results simply. And this is a big one. Ethical AI deployment. Understanding bias, ensuring models are explainable, maintaining transparency, that's huge.
That's a great breakdown of the skills mix. The report also sketches out a potential career path in this new world, right?
Yeah, it suggests thinking in stages, early career, maybe the first 3 years, focus on analyst roles, internships, build that core tech fluency Python. Excel wizards are still needed. Maybe start on CFA or FRM level 1.
Then mid-career, say 3 to 7 years.
That's where you specialize. Maybe you go deep into treasury systems or AI model building and validation, designing trading algos, or maybe AI agent design for a specific area.
And then more senior roles, 8 years plus.
That's moving into leadership, heading the teams building these things, setting the strategy. Titles like AI product owner, head of treasury AI ops, digital bond syndication lead, managing the systems and the people.
And this isn't just a prediction, it's happening now, globally. The report gives some examples.
It does. Concrete examples. North America. You've got JP Morgan, Goldman Sachs using their own internal generative AI for trading support, checking legal docs, compliance tasks.
Yeah.
UBS is doing innovative things like using avatars for video research. Deutsche Bank is integrating AI into FX execution.
And Asia?
The report mentions strong AI adoption in India's financial sector using agentic AI. And banks in Singapore are automating parts of the bond placement process with AI. It's definitely a global shift.
So let's try and pull this all together. What's the predicted outlook for, say, the next 5 years, 2025 to 2030? Where does the report see things landing?
It summarizes the transformation. Trading. Human traders really shift to strategy oversight, managing exceptions, while AI agents handle the minute-by-minute pricing and execution.
Primary markets like bonds.
AI handles more of the routine stuff autonomously, marketing outreach, document generation, basic investor Q&A using live data, moving towards much fuller automation. AI managing cash sweeps, triggering hedges, doing complex forecasting with less and less manual oversight needed.
And the hiring focus, where does that ultimately settle?
The focus sharpens onto roles needing that blend. Strong financial judgment applied to overseeing AI. Roles centered on model validation and AI governance become absolutely critical. You need people who understand the finance, understand the models, can check the outputs, manage the risks, ensure compliance.
Right. So, wrapping up our deep dive into this report, the main takeaway seems clear. Jobs in capital markets and treasuries are fundamentally changing. It's not just tweaking things. It's a different game.
Absolutely. It demands this powerful mix of traditional finance smarts, serious data skills, tech fluency, and the ability to connect all those dots.
And the key message for anyone listening who wants to stay competitive.
The report is pretty blunt. Get fluent in AI concepts. Build those programming and data skills. Stay absolutely current on regulations. And be adaptable, ready to work across different functions and technologies. That intersection of finance and tech, that's where the future is.
That's a really strong point to end on, thinking about how fast this is all moving and that shift towards jobs focused on model validation and AI governance.
Yeah.
It makes you wonder, doesn't it? What is the future balance going to be between trusting our human gut, in finance versus trusting the algorithms. Definitely
Yeah.
something to think about as you navigate your own path forward.